Welcome back. So the trading cues that we're getting across from Asia are still weak. Just reminding you that the Chinese markets, Hong Kong and Taiwan, they're all shut today. But the ones that are trading, the Nikkei is down, still down over 2%, 2.3%. Singapore is also slightly lower, as is Australia. So still weak cues coming through. The implied open, let's pull it up again. It was suggesting that we'll probably start about 100 points lower. 109 points lower. So that's the sense for us. Now, what about individual stocks? There's a fair amount of news flow as well to go over. We have our team standing by with the CNBC-TV18 list of top stocks to watch. Guys, morning to all of you. A lot of banking updates came in yesterday. Abhishek, let's start with HDFC Bank.
Well, HDFC Bank has seen one of the best sequential business momentum in last 4 to 5 quarters. So take a look at the deposit growth. It's at 14% YOY and about, close to 6% quarter-on-quarter. This sequential growth, that is quarter-on-quarter growth, is one of the best that you are seeing in last 4 quarters. The CASA in absolute value grew by more than 8.2% on a sequential basis, which meant that for the first time in last many quarters, CASA ratio has improved for HDFC Bank. Now, CASA ratio has improved to 34.8% versus 34% in the previous quarter. Advances growth pretty healthy on a sequential basis. Sequential loan growth is at 4% quarter-quarter, one of the best that you are seeing in last 5 quarters. So the overall AUM growth is about 7.7% YOY and about 3.3% on a sequential basis. Calculation shows that they are on trajectory with respect to maintaining their CD ratio at a lower level. So CD ratio has declined to 97.4% when compared to 105.4% in the same quarter last year and about 99.2% in the previous quarter, in line with the guidance that they will look to lower their CD ratio. Back to you.
Right, good update coming in from HDFC Bank that should support the cause of the Nifty Bank, which is outperforming in any case. So we'll keep an eye out on that. But Abhishek, stay on. A lot of other financials also reported their fourth quarter updates. Bajaj Finance and L&T Finance. What do you make of them?
Well, Bajaj Finance, the AUM growth rate has slowed down. So it is one of the weakest that you are seeing in last 8 quarters. And sequentially, the growth is the weakest that you are seeing in last 11 quarters, although the numbers remain strong when compared to what you are seeing with the economic activity. New loans are up 36% YOY and down about 11% sequentially. This is seasonal in nature, that Q4 versus Q3, you do see, new loans declining. Customer base has grown at 21.7% YOY and about 4.8% sequentially. The AUM growth rate, that has slowed down, and that's to be seen what the management makes of it. It's now down to 26% YOY and about 4.7% sequentially. One of the negative that I have calculated from the numbers is that the cross-sell rate has declined to 5.9% versus 7.2% in the previous quarter. So cross-sell rate is one of the lowest that you are seeing in last 4 quarters and second lowest that you are seeing in last 15 quarters. Now, L&T Finance, the disbursements have remained weak despite Q4 seasonally being very strong for them. So retail disbursements are down 1.2% YOY and about 2.2% on a sequential basis. The key weakness in the disbursements are seen in farmer finance, which is down nearly 30% YOY, urban finance, which is down 6.5%. Retail loans have grown at 18.8% YOY and about 3% on a sequential basis. The disbursements to AUM ratio has declined on a sequential basis to 19.5% versus 21.4% in the previous quarter. Back to you.
Right, Abhishek, thanks a lot for that. I'm looking at Adani Wilmar as well as DMart. Both of them came up with their quarterly updates as well. For DMart, let's start with that. No real fireworks, but nothing really to worry about as well. Standalone revenue growth at around 16.6%. The total stores at 415. What's good about these numbers is that the company has added 35 stores. So the people who are, asking for DMart to increase the pace of their store addition, that's happened. Typically, fourth quarter is where they add more stores, but 35 is higher than the average that we've seen in the last few 4-quarter additions as well. But what's not is that the implied same-store sales growth, if you look at the stores last quarter, as in the last year and now, it's close to around 3% which is lower than what we've seen earlier. So the key to track now will be what the product mix is, how the margins for DMart stand out in light of the competition that we've seen from quick commerce. And more importantly, we have a new CEO. Anshul Asawa takes over from Neville Narona. So those will be a couple of factors we'll be watching out for. Mild green on DMart is what we're seeing. On Adani Wilmar, they are in the right time for the palm oil cycle, and that's working for them. 7% volume growth, 36% revenue growth. Edible oil volume growth at 6%, revenue growth at 44%, food and FMCG segment growing at 11% as well. All boxes checked. And more importantly, after Adani has decided to sell their stake to Wilmar, they've decided to change the name of the company from Adani Wilmar to AWL Agri Business Limited as well. So we'll keep an eye out on that. For now, good update coming in. See green on AWL.
Okay, so that's one positive number from the FMCG space coming through. Back to Abhishek. He's watching out for a couple of other names, Bandhan Bank and I think even RBL. Abhishek?
Deposit momentum has been pretty strong for Bandhan Bank. It's grown at 11.8% YOY, but 7.24% on a sequential basis, which is perhaps the second best deposit growth that you are seeing amongst lenders on a sequential basis. CASA is up 6% quarter-on-quarter. CASA ratio largely stable, you would call it 31.4% versus 31.7% in the previous quarter. Calculation shows that the net interest margin may get impacted because CD ratio has declined to 91.2% versus 93.6%, but no taking away from the fact that deposit growth is pretty strong over here. RBL Bank, the business growth is one of the weakest that you are seeing in last 10 to 11 quarters. However, CASA ratio has improved for them. So deposits are up 7.2% YOY at about 3.9% quarter-on-quarter, one of the lowest deposit growth on a year-on-year basis that you are seeing in last 10 quarters. CASA ratio has improved for them. We are seeing this with certain lenders that CASA ratio is improving, which is a key trend to watch out in the banking sector. 34.15% CASA ratio in this quarter for RBL Bank versus 32.8% in the previous quarter. Gross advances, they are at a growth rate of 11 quarter low, coming in at 10.9% YOY and about 2.5% sequentially, which means that the stock could be under pressure. Back to you.
All right, Abhishek, thank you very much for that. Mazgaon Dock, we were talking about that earlier. Let's sort of get you the news flow here. Upasana's got that. Upasana, morning.
Good morning. Well, the stock remains in focus today as government to sell up to 5% stake in the company via OFS. Now, government currently holds 85% stake in the company and OFS includes base size of 2.8% and green shoe option of up to 2%. Now, OFS for non-retail investors will open on 4th of April, that is today. And for retail investors on 7th of April is what the company has indicated. The floor price, however, for the offer is set at 2,525 per share, which is at an 8% discount from yesterday's closing. And the total size comes up to 4,900 crore. So we'll be watching out for this OFS.
Okay, all right. Got that, Upasana. Thank you for that. With that, I think we can quickly recap our list of stocks. No, actually, we have one more before we get to the recap. Vamakshi is watching out for Angel One. Vamakshi, good morning.
Well, good morning, Surbi. Angel One has come out with a mixed update for the month of March. When we look at the gross client addition, it stood at 4.7 lakh. This is a downtick of almost 4% month on month. And this is bad because this is the third straight month where the gross client acquisition has slowed down. The client base, though, is steady at 3.1 crores, an uptick of almost 1.4% month on month. When we look at the average daily orders, they saw an uptick of almost 8%. This is after they saw a downtick of nearly 9% in the month of Feb. So that bodes well for the company. Apart from that, another positive is the average daily turnover, which stood at 36.38 lakh crores. This is an uptick of almost 23% on a month-on-month basis, and in fact, it has jumped to the highest level seen since November 2024. Keep in mind, the market share, though, has taken a hit. Equity market share is down nearly 60 basis points to 19.1%. F&O market share is also seeing a dip of almost 60 basis points to 21.5%. But the commodity market share has managed to recover after taking a hard knock in the month of Feb. Commodity market share now stands at 57.9%. So overall, a mixed update for Angel One. But in my opinion, the negatives outweigh the positives. So going with a red for this counter.
All right, the negatives outweigh the positives, but commodity is doing extremely well. Let's talk about the commodity itself. Overnight, a big decline on crude prices. How does that impact listed companies? We have Manisha joining in. Manisha, a big slide yet again.
Oh, well, absolutely. You know, as the tariffs were announced, the crude oil prices were already trading 4% down and markets were still digesting those tariffs. But the combination of an increased oil production and weak global economic outlook has put a very strong downward pressure on the oil prices. So if you look at the kind of decline that we saw yesterday, a 6% of a fall, well, this is the biggest percentage drop since August 2022. And for WTI, the biggest drop also since 2022. What the markets were also reacting to is the OPEC and allies meeting, which says that they are boosting output by 411,000 barrels. Now, this is versus the estimate of 140. So 400 versus 140 is the kind of number that the markets panicked under. And then the OPEC will also now meet on 5th of May to decide on what they want to do for the month of June. At this point in time, you are looking at higher supplies from OPEC. The U.S. inventories have surged much more than the street was anticipating. And then you have higher tariffs, lower economic growth, lower demand growth expectations as well. And all of that has continued to weigh onto the crude oil prices. There are no buy calls as I was searching for them. It still is further decline that the street is anticipating and further sell calls coming in for crude at these levels as well.
Okay, all right, Manisha, got that. Let's quickly recap our list of stocks to watch. Then the ones that have positive news flow around them are HDFC Bank, Avenue Supermarts, Adani Wilmar and Bandhan Bank. Stocks with negative news flow include Bajaj Finance, L&T Finance, RBL Bank, Mazgaon Dock, Angel One, and of course there's a neutral call on OMCs going out. Take a quick break, but up next we'll have Siddharth Khemka of Motilal Oswal Financial Services joining in to get some fundamental ideas going for Friday trade.